Welcome back. Mark Oswald, Londonderry Heart, Home and Soul. We've talked about pre-qualification, pre-approval, types of mortgages and financing, credit, and now private mortgage insurance. I can just feel the excitement. But I've got two experts here with me that will make it more informative for you. To my immediate right is Deb Ferrante with Essent Guaranty.
Yes.
Correct? And back by popular demand is JJ Sawicki, who is Assistant Vice President with Merrimack Mortgage. Thanks for coming back.
Thank you.
Thank you for having us.
The ratings are going through the roof.
I know.
Okay. Okay, so PMI, and I know we're guilty in our industry of using a lot of acronyms and abbreviations, but why don't we start with that and explain what that is?
Sure. PMI, as you said, is private mortgage insurance. And basically, private mortgage insurance is an insurance policy that protects the lender, the mortgage lender, in the event that the borrower defaults on their mortgage. And typically, you will have PMI on your mortgage if you put less than 20% down.
Putting less than 20% down is considered, it's one aspect of risk that a lender looks at. So in a loan obtaining PMI, if they're putting less than 20% down, it gives that lender more of a comfort level when it comes to lending to that particular borrower.
Greater confidence.
Greater
Yes.
confidence, yes.
They're protected.
They're actually passing money across the table.
Absolutely.
Yeah.
Okay, so conventional and typically if a buyer puts down 20% or more, that exempts them from PMI.
Correct.
Okay, all right. So VA, FHA, rural, some conventional at 3 and 5 or 10% would still require PMI.
Yeah, FHA, VA, and rural housing are different programs. So private mortgage insurance is provided on conventional mortgage programs. So the conventional mortgage programs are, again, the ones that are done through the government-sponsored
Right.
entities like Fannie Mae and Freddie Mac.
Right, okay. And at what point does that cease? If a borrower is required to have PMI, is there a point where they earn out, if you will?
Yes, typically, so you can request that your mortgage insurance, your PMI on a conventional loan be canceled at 80% of the original property value. It automatically will be canceled at 78% of the original property value. So
typically, if you have somebody that has, they're putting less than 20% down, but maybe they're at like an 85 or 82% LTV, mortgage insurance really shouldn't be that scary to that particular borrower because it's not going to take long to bring their LTV down to 78% where it automatically drops off.
And then you've got borrower-paid mortgage insurance.
we do. There's several options when you talk about private mortgage insurance, and I would encourage you to speak with your lender partner about your options for private mortgage insurance. Typically, most PMI policies are borrower-paid monthly mortgage insurance, which is where you pay a small amount every month in your mortgage payment. So that is called a borrower-paid mortgage insurance option. And then you also have the option of doing a borrower-paid single premium, which is basically where you pay all of the insurance up front in a single lump sum paid by the borrower. Or you could have a seller contribute that as well if you negotiated that in your contract. What's great about borrower-paid mortgage insurance is that it can be canceled.
And it may be tax deductible, but you want to consult a tax professional in those circumstances.
Okay. And if a buyer has questions about this, who do they contact?
If they have questions about their MI, they would contact their loan officer and ask the questions. What I always recommend is the MI companies, they offer, again, both borrower-paid monthly MI, or a borrower pays a monthly insurance premium that is attached to their monthly mortgage payment. But there's also an option that's called lender-paid MI. Lender-paid MI is one of my favorite options. It typically, with well-qualified borrowers, especially with higher FICO scores, they're going to find that the overall payment might be less, and the rate might be a little bit higher because it is lender paid, and ultimately what we're doing is we're rolling it into the rate.
So you have a couple of options.
Okay. And what, in your expert opinion, what's the biggest misconception about mortgage insurance?
I think definitely,
I think people typically think that it's just going to hang on forever, and it's going to, put them completely out of qualifying. But, again, kind of going back to what we were talking about when it comes to products and looking at them like boxes of cereal, it's the same with conventional loan products. They have so many different options, and there's also multiple options where you can find a reduced mortgage insurance premium that you may qualify for. So I wouldn't shy away from mortgage insurance just because it's mortgage insurance. I would definitely talk to your loan officer and see what options are available to you.
Okay, terrific.
and I
Final-
think it's a great, just to add to what JJ was saying too, I think a lot of consumers, myself included, when I was younger and I was buying my first home, I thought I needed a 20% down
Right, yeah, that's true. Yeah.
payment, 20% down
No matter what.
down payment no matter what. And so it's really, really important, I think, to be an advocate for yourself and to work with your mortgage professional partner and ask questions and see what you can qualify for, because there's just so many options out there.
Yeah,
A lot of options and a lot of opportunities.
Yes,
Absolutely, yeah.
And
absolutely.
interest rates still record levels,
yeah.
Yeah.
because I'm old enough to remember 18%.
No comment.
We're not going
Mark.
to go there. Thank you both for stopping by.
Thank you very much.
Thank
Appreciate
you.
it.
And thank you for watching. As always, be of good heart.